Hi, I'm James Robinson, and this is the Extrinsic Value Report for October of 2018. In October, the market was down significantly. When the dust had settled, the S&P was down 6.94% for the month. We also were down, but not quite as bad. We were down 3.81% for the month. So the silver lining, if there is one, is that we did manage to outperform the S&P 500 by 3.14%. My fund's value started the month at $10.64 a share. It dropped to $10.24 a share. We're still positive, but we're not exactly having the kind of home run year we would hope. The changes in my total performance for the year from January 1 to up 2.36%, and again at the end of last month we were up 6.41%. My annualized rate of return is now 3.14% for the year, which I'll admit hardly seems worth all the time, effort, blood, sweat, and tears I put into doing this research and searching for these stocks. But when the market's having a bad year, it's hard to have an excellent year. So there is some good news. For the year since January 1, we're outperforming the S&P 500 by 1.77%. Not surprisingly, this month we were not able to convert any stocks from short-term holds to long-term holds. Obviously, when the market is falling as quickly as it was, it's hard to have any stocks which are doing well and going up. To recap, I own 15 stocks in my active portfolio. Those are companies which I buy, believing they're undervalued, believing them to be strong companies. When they go up 15%, I will sell my original investment, keep the 15% profit as a long-term hold. To be clear, the 15% is not 15% for the month, but 15% since the date I purchased the stocks. However, the market had dropped so precipitously that in looking through some of the stocks that I didn't currently own, I felt there were some really significantly undervalued companies. And so I added a 16th position. I purchased shares of SnapOn, which is symbol SNA, during the month. As you can see, we bought SnapOn on the 12th of October. We paid $167.82 a share for our position, and we plan on selling that when it reaches $194.63. This month we added no new cash to the fund. However, six stocks did pay a dividend in the month. The amount was negligible in terms of cash on hand. However, the total dividends did equate to 0.327% of the stocks, of the portfolio value. There was, however, a significant change in the amount of cash that we have on hand. We started the month with about 5.7% of our portfolio in cash. However, after the purchase of the SnapOn investment, we were down to less than 1% in cash. So for the first time this year, we're virtually 100% invested in the market. Most investors look at their performance based on how much the stock goes up and tend to pay relatively little attention to dividends. I think that's a mistake. I think dividends are a significant portion of the value that's paid to you by a stock, and it should be analyzed and looked at and considered as when making decisions. So here's a chart of our dividend performance for the year. You can see that it has been going up on a monthly basis, a little bit choppy, but certainly on a quarterly basis. The good news is our dividends do seem to be increasing. We think that that's due to several factors. Our firms in general are profitable and raising their dividends, which is good. We have more money invested in our fund, both in terms of additional cash invested and in terms of a higher percentage of our funds invested in stocks. Also, our inactive portfolio has gone from 0% of our fund to 12% or 10% of our fund, which means we have more companies that are paying us dividends. Today we've been paid dividends of 2.5% of our invested funds. In September we received dividends of $553. We think a more valid measure of dividend performance is to look at quarterly numbers. Most stocks pay dividends once a quarter, which means some months several stocks are paying dividends and other months fewer stocks are paying dividends, so it tends to be lumpy. But if you look at it on a quarterly basis, that should all even out because most stocks pay quarterly. And so when you look at our quarterly numbers, you can see that we've had significant improvement in our dividend performance quarter over quarter. So to summarize for the month, stock investments were down 3.81% for the month. However, the S&P was down 6.94% for the month. We did manage to outperform the S&P 500 by 3.14% for the month. And for the year, we're now outperforming the S&P 500 by 1.77%. No stocks this month passed the 15% appreciation threshold and became long-term investments. We now have 16 stocks in this fund of our long-term fund, totaling 10.9% of invested funds. I added one new stock to the fund, SnapOn Tools, giving me 16 stocks in the active fund. Cash decreased to less than 1% of assets. We researched 0 new companies, found 0 solid firms to track, and found 0 stocks cheap enough to warrant further research and considering buying. And that's the report for October of 2018.